welcome to today's morning report on Friday the 3rd of October with me, Richard Perry, market analyst at Handtech Markets. These European markets have started actually on a fairly positive note, and that's come after a big sell-off that we saw yesterday, big down day in Europe, but then Wall Street closed fairly positively actually, towards basically flat down quite considerably earlier in the session. So the European markets are playing a bit of catch up with that. The and the CAC are both up around about just over 0.5% on the day. The day open today, we've got a holiday, so it's just the FTSE and the CAC as the main indices that are playing today. The dollar also has been rebounding, and that has come after we've had a disappointing couple of days actually on the dollar. Bit of a correction being seen on many of these dollar pairs. In this with this dollar reversed a little bit in the last couple of days, and that has just come on the back of a little bit of disappointing economic data, and also driven by certainly the euro rebound was driven by a bit of disappointment in Mario Draghi not really going full steam ahead in terms of the easing measures, not the ECB not giving target of its target size for its asset purchases, and also really alluding to quantitative easing in a full-blown public debt scenario. So there was a bit of a relief rally yesterday, and that is actually being reversed today, because we've got early on this morning, we've had all these Eurozone PMIs coming out for the service sector, and they're actually disappointing pretty much across the board. France, Spain and Italy all disappointing in their on their expectations, and it doesn't look as though the service sectors are doing all that well. Going forward though, today we've got the as I said, the non-farm payrolls is the major focus for our markets today. It's expected to come in at around about 215,000 for the month, and I think you can probably also assume that there's going to be a bit of an upward revision from last month's 142,000, which was generally seen as a bit of and the market sort of discounted it to a certain extent. So it's likely to be revised higher, I think, today. But the other factors we need to watch out for in this payrolls report, as ever now, I think, obviously unemployment is key. 6.1% is less on the last month, but probably more importantly than all is the average hourly earnings, which last month came in at plus 0.2%, and that, if that shows any improvement on that plus 0.2%, I don't think the market will take that as certainly dollar positive, because the Fed is certainly looking out for earnings growth as one of the key drivers behind when they start to raise interest rates or start to hike interest rates. We're also looking out for the participation rate as well improving. So that's payrolls. That is clearly going to be the big focus for the markets today, but also these service sector PMIs coming out. You've already had all the Eurozone ones come out, and towards the UK version, 60.5 was last month. It's actually expected to dip slightly to 51. The service sector PMI is for the UK economy, 75% of the UK service sector based, so it is an important number for the for sterling certainly. Then this afternoon, after that payrolls report, you've got the US ISM non-manufacturing data, and that comes out at 3 o'clock and is expected to again just slightly come lower. 58.5 down from 59.6 is the expectation. So that moves on to my chart of the day, which is the Aussie dollar. Now, I did say earlier about this reversal of sorts that we're seeing in the US dollar, and that has certainly been played out in this Aussie dollar in the last few days. We actually had on Wednesday, we actually had a rebound from the massive critical support, 86.58. If you're going to go to the pip, is low from January, and if very quickly you'll see that that is a low that dates back many years, back to 2010. So 4-year low, that is that January low. So having held on to that, subsequently formed a bit of a hammock, which is a bullish pattern, broken the downtrend. We've also seen the strong move yesterday, affirming that move, and we're now beginning to see these momentum indicators turn around a bit as well. So watch out for those coming at higher. On the intraday chart, you'll also see that that's the broken downtrend, but we're also now beginning to push above some resistance levels now. That the resistance at 87.50 was broken yesterday, and we're now looking to push on towards this 88.30 resistance, which has sort of been kept today, but that is the next resistance you'd look at breaking. There's a bit of a consolidation at the moment, as the Aussie calms down a bit, and the markets generally tend to be fairly calm in front of payrolls report, so there'll be definitely you can imagine a fair amount of volatility following on from that payrolls report. So it'll be interesting to see if we can hold on to, first of all, 80.50 as a support, but then we're looking for a higher low on the Aussie, as that critical support at 86.60 stays intact. Anyway, I wish you good luck in your trading on the Aussie dollar today, and I will speak to you later. Thank you.